Diversified basis was uniformly good for many years prior to 1957. It can probably be affirmed without hesitation that it constitutes a safe and profitable method of determining and taking advantage of undervalued situations. However, during the general market advance after 1957, the number of such opportunities became extremely limited, and many of those available were showing small operating profits or even losses. The market decline of 1969 to 70 produced a new crop of these sub-working capital stocks. We discuss this group in Chapter 15 on stock selection for the enterprising investor. Bargain issue pattern in secondary companies. We have defined a secondary company as one that is not a leader in a fairly important industry. Thus, it is usually one of the smaller concerns in its field, but it may equally well be the chief unit in an unimportant line. By way of exception, any company that has established itself as a growth stock is not ordinarily considered secondary. In the great bull market of the 1920s, relatively little distinction was drawn between industry leaders and other listed issues, provided the latter were of respectable size. The public felt that a middle-sized company was strong enough to weather storms, and that it had a better chance for really spectacular expansion than one that was already of major dimensions. The Depression years 1931 to 32, however, had a particularly devastating impact on the companies below the first rank, either in size or in inherent stability.